And good evening. This is the Elliott wave update for the S&P 500 for Monday, November 8th, 2021. Not much to be adding to current analysis today. The market did, and initially in Globex, as we talked about last night, decline, and then they proceeded to continue to rally or to push the prices higher. And that went right through to today's opening, where the market reached a high at 47.07. At that high, I was beginning to feel it's like, okay, so we just do a little dip down and now we're going to go back up and break towards the next resistance above at 47.34. That did not happen. So that leaves this count in place for right now. Again, it has to remain as a possibility, not necessarily as cast in stone and definitive that it did complete the B wave. That would be on top of the C would be a larger B, an intermediate B. And, and the reason is because obviously that we've not actually broke down, put in a new low. So I have to consider this still could be 1, A, B, C, 2, and now we're starting down here into a third wave down as part of this initial 5 off of that high, if that is what's happening. On the other hand, it still could be just an A, a B, and then we're just coming down in a small C wave, in which case we would be looking for it to break below 46.74.25, maybe come down as low as 46.65, and then rally again back up to a new high. And then if that's the case, then I would have to include that this whole thing has just been, this is wave 1, wave 2, and this is all wave 3, and this would be 4. Now, large as it is, stranger things have happened, so I've got to keep all these possibilities open until we begin to get definitive answers from the market in terms of direction and how this all plays out moving forward. There was a lot of back and forth today in terms of market direction due to the infrastructure package being passed and soon to be signed into law, at least the first part of it. And then money will start to be dispersed, and then we'll see it being put to action. And so there was that initial bounce that was due to that, but now I think it has to be more refined, and it's going to be turning to particular sectors within the S&P that are going to benefit from contracts from the government to get the work done. Also, what we still need to factor in is how many jobs are going to be added to the payrolls. And so there's still a lot of information out there. And so while I have to leave open the possibility that we might rally up and attempt to get to 47.34 or even higher, as we discussed yesterday, I am beginning to feel that we will likely move into this corrective phase while this whole infrastructure package is being rolled out, put together, enacted, et cetera, et cetera. I still think in between there that there's a lot of froth in the market in terms of just being pumped up as high as it has been, particularly in the tech sectors. And that needs to be unwound a little bit here. Now, we did get PayPal came out and put their earnings out today, and basically came in above expectations, but not by a lot, I think like 4 cents. The market was initially about $11 higher, and now it's settling back down. It's now about $6 or $7 higher. So while that settles in, we don't, we have continued to have a few additional reports to come out of major players, one being NVIDIA, and I don't believe NVIDIA is a part of the S&P, but NVIDIA still needs a report. The chip stocks did get a great boost today, as they went up as a sector, I'm going to say, and AMD going up 13, Intel went up today, Micron also giving higher numbers today as well. Now, what could be going on? Again, if we drop back down and we hold above 46.65, I can probably place that as a corrective 3 waves down, which would leave open that we can go back up to above the high at 47.11. Now, I would think that if we turn from here, then we need to start moving higher and not really get caught in a box is really what happened today. You can see the market got up, ran up to 47.07, ran back down, up, down. So it stayed within a tight range over what we have basically been seeing for the last 3 weeks. So a lot is being digested. A lot of, I think that traders and analysts are all trying to determine how all this factors in and what we can look forward to going forward. So while that is in process, we now need to include that this might just be 1, 2, 1, 2, and we're going to start to tumble lower. That will become very evident as on an hourly chart, we break below the 50-day moving average, and then again, start to break below some of these supports at 46.65, 46.53, 46.40, etc. Now, the major factor that would come into play is if on the hourly chart, we break below that 50-day moving average. Now, that sits at 46.27. Now, if I go out to the daily, here's what we're going to be looking for on the daily to start to give us the indications that the market is indeed displaying weakness. First of all, we need to break below the daily 4, which is at 46.76. Then we need to break below some of these support lines. And then we also have 46.35. That's where the 8 is. The 20 doesn't come in until 45.64. And that would need to break to give us, and here's the kicker, it needs to break it, and the bar, which would is a daily bar, needs to close below that moving average for it to really start to signify weakness in the market. So if it's going to break 46.75, it needs, 46.76, it needs to close below that level. Same here, it needs to close below that level. So since it's a daily bar, the day would need to close down. And then again, that's what we've been looking for here, and then again here. So stronger weakness on a little bit longer term basis will come via the daily chart, breaking and closing below the 20 and the 50-day moving average. Anything else, we really basically can consider it just a pullback. Closing below it shows us that we might have a little bit of weakness coming in the next day, but it needs to really start to close below these higher level, which would be the 20 and the 50, before we're starting to really spell out that the market is going to decline for a period of time. Now, back down at that hourly chart, that's where it's all going to start. So again, I am basically looking for the market to give us a 5 waves down. And remember yesterday, as I said, this, if anything, is a 1, and then an A, a B, a C, maybe a 2 at today's opening highs. And then we're starting to go on a 3. So we'll see if that develops out. One way it will develop is that it comes down and breaks below 46.82. That's where the 50-day moving average is sitting right now. And so it needs to break that cleanly. The hourly bar, that hourly bar needs to close below it to give us some support that, yep, we're heading lower. And then we're going to be looking for the same thing again as it comes down to these support lines. So again, if it holds, if it comes down and breaks below 46.74, which is the low that we saw on Friday, then we would be looking for a test likely of 46.65. Come down and give a test there. But a break there would kind of, if it holds, breaks a little bit below and then dips and then moves back up, I'm going to be able to consider that as an A, B, C. And then likely that we're going to come back up here. We're going to break above 47.11 as we head up towards that 47.35. Now, continue lower, then it's going to be 1, 2, 3, 4, 5. And then it becomes too big in order to remain as a corrective move within the context of this last leg up. So it's already getting a little bit too big for me. So that's why I'm leaving this 5 and that C there. Possibility that goes up there and breaks it, yes, it exists, but it's the probability now is slipping a little bit lower. As each day will pass by, it goes a little bit lower. So we're going to leave it open for tomorrow. And again, we have support at 46.75. We have support at 46.82, which is where the 50-day moving average is sitting. And then we have support again at 46.65. Upside, you're going to find that resistance again at 47.07, because that was today's high. And then 47.11, 47.12, that is last Friday's high. And then it's on up towards 14,000, excuse me, 4,734. And that's where I'm going to leave it for today. Continue to trade smart. Today was basically a slow day in a box. And so there weren't a lot of opportunities, but there were some. They were playable. And you had to work a little bit harder at it, but it was a profitable day as far as trading is concerned. And tomorrow we can only hope for the best. So trade smart, trade according to moving averages. Again, remember, I use them on a 1, a 2, and a 5-minute chart, and you can work your trades accordingly to where the moving average is sitting. And as they break in both directions, that helps to guide your trades. Our next update will be on Tuesday, November 9th.